To maximize tax loss harvesting with Betterment, start by understanding the concept of tax loss harvesting, which involves selling securities that have declined in value to offset gains from other investments. Reducing your tax liability. Betterment is a popular robo-advisor that offers automated tax loss harvesting. First, ensure you have a taxable investment account with Betterment, as tax loss harvesting is not available for tax-deferred accounts such as 401k or IRA. Next, review your investment portfolio to identify securities that have declined in value. These are the ones you will sell to harvest losses. Betterment's automated tax loss harvesting feature will periodically review your portfolio and sell securities that have declined in value, using the proceeds to purchase similar securities, thus maintaining your target asset allocation. This process is designed to minimize taxes while maintaining your investment strategy. To maximize tax loss harvesting with Betterment, consider the following best practices. Regularly review your portfolio to ensure it remains aligned with your target asset allocation. Avoid making significant changes to your portfolio during periods of high market volatility, as this can trigger unwanted tax liabilities. It is also essential to understand the wash sale rule, which states that you cannot buy a substantially identical security within 30 days of selling a security at a loss, or the loss will be disallowed. Betterment's automated tax loss harvesting feature is designed to avoid wash sales, but it is crucial to be aware of this rule when making manual changes to your portfolio. In addition, consider tax loss harvesting throughout the year, not just at year-end. This can help spread out the realization of gains and losses, reducing your overall tax liability. By following these steps and best practices, you can maximize tax loss harvesting with Betterment, potentially reducing your tax liability and improving your investment returns.